Classification of manufacturing costs according to behavior. In addition to classifying manufacturing costs into direct material costs, direct labor costs, and factory overheads, manufacturing costs are often also classified according to their cost behavior. The term cost behavior refers to the behavior of a specific manufacturing cost in relation to changes in production levels, in other words, the number of units produced. Manufacturing costs are classified into the following four groups according to their cost behavior. Firstly, we have the fixed costs. Secondly, variable costs. Thirdly, semi-variable costs. And finally, semi-fixed costs, or so-called step costs. So let's first focus on fixed costs. Fixed costs do not vary according to changing levels of production. Even if production is stopped, these costs will still be incurred. Fixed costs are constant at all levels of production. As an example, the rent paid for a factory is a fixed cost. The amount paid for rent remains constant, irrespective of the number of units that are produced. Even if no units are produced, the same amount of rent must still be paid. So graphically, we see the fixed cost is constant, irrespective the number of units. The more the number of units, it doesn't affect the fixed cost. The fixed cost stays the same, whether it's 1,000 or 0 units produced. Variable costs vary according to the number of units produced. If production stops, these costs will no longer be incurred. Variable costs are directly proportional, therefore, to the level of production. As an example, the direct material costs and direct labor costs display variable cost behavior. A manufacturer who produces canoes pays 30 Rand for a plastic pedal. If 10 canoes are produced, then the cost for plastic pedals will be the 30 Rand times the 10, which results into 300 Rand. If no canoes are produced, then the cost for pedals will be 0. So graphically, the more units are produced, the higher the costs become. Thirdly, the semi-variable costs. Semi-variable costs have both a fixed and a variable component. The fixed component is the minimum cost that will be incurred, even if no units are produced. The variable component increases as production levels increases. If production stops, only the fixed component of the cost is incurred. An example is the electricity cost for a factory. There is a fixed monthly charge that must be paid even if no electricity has been used, the fixed component. Electricity costs will then increase as production increases, since the machinery will use more electricity, the variable component. So graphically, it is a combination of the fixed and the variable cost that we had in the previous slide. So we have the fixed cost component, the cost that will apply even if 0 units are manufactured. Then as each unit is manufactured, the semi-variable cost kicks in to increase the total cost. Finally, the semi-fixed or step costs. Semi-fixed costs are costs that are fixed up to a certain level of production. If production exceeds this level, then these costs increase in steps. As an example, a machine can produce a maximum of 1,000 units per day. If more than 1,000 units have to be produced in a day, then a second machine is required. And if 3,000 units is required, a third machine. And each machine will result in extra costs. So graphically, we can see we will get the stepwise graph. Since this is the fixed costs for the first 1,000 units, then it jumps up to a new cost as we now need two machines. And then after 2,000 units, it jumps up again as we need a third machine. General classification and classification according to behavior. It is important that the classification of manufacturing costs according to behavior is not confused with the general classification, i.e. direct material costs, direct labor costs, and factory overhead costs. So the last mentioned are the general classification, whereas those four graphs that we studied were according to behavior. The same costs may be categorized using both classifications. For example, a raw material used to make a product is a direct material cost, but it's also a variable cost in terms of behavior. So general classification, direct material. According to behavior, a variable cost. Factory rental is a factory overhead. So that is general classification as well as a fixed cost if we think in terms of cost behavior. So let's now focus on manufacturing cost calculations using the fixed and the variable costs. Remember previously we focused on cost calculations related to the general classification. Now we focus on the behavioral aspects. In grade 12, we will ignore semi-variable costs and semi-fixed cost behavior and categorize manufacturing costs as either fixed or variable. So the total manufacturing cost of a product may be calculated by adding the fixed and variable costs involved in the manufacturing process. In equation form, therefore, total manufacturing cost is equal to the fixed costs plus the variable costs. The units cost, as mentioned previously, is calculated by dividing the total manufacturing cost by the total number of units produced to get the cost for one unit. So in equation form, unit cost of a product is the total manufacturing cost over or divided by the number of units produced. As the level of production increases, the variable costs will increase proportionally while the fixed cost remains constant. Thus, the unit cost of a product decreases as the number of units produced increases. This concept is called economies of scale.